Happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, December the 3rd, and wanted to talk about what's been going on in the markets over the last couple of weeks. And I hope that everybody had a wonderful holiday last Thursday and wanted to talk about what's happening in the markets since we last spoke a couple of weeks ago. And wow, as we're talking right now, markets are sitting at all-time high levels on the Dow, the S&P, as well as the Nasdaq, hovering off all-time highs, and we're coming off the best month that the markets have seen since 1987. So where do we go from here, and what are markets telling us moving forward? And I want to talk about that and help you guys with that, and then talk about what we're doing at River Place to prepare for the next three to 6 months going ahead. So like I said, we are hovering at all-time highs, but what's really encouraging too is what we have seen as markets have been moving higher over this past month. We've really seen the value trade catch up to the growth trade, which value outperformed growth for the month of November. And another encouraging thing that we have seen and are beginning to see is small and mid-cap companies are outperforming the S&P 500, which is your large cap companies. And year to date, the small and mid cap and the value trade have all been laggards. So it's a very, very healthy sign of a more broad-based growth participation in the markets. And that catch-up trade is very, very encouraging that there's confidence in more economically sensitive stocks. However, as we're heading into the end of November, the beginning of the December, we are starting to get some economic data that is showing some slowdown as we are seeing the stimulus money from the spring start to really run out, and we don't have a deal approved yet through Congress. Now, there is some hope that there is a roughly $900 billion deal that hopefully can get some bipartisan support and can be passed by the end of the year, but we're really starting to see the negative ramifications of not having a stimulus deal number 2 passed and through Congress to this point. And we are seeing slowing economic conditions. We're seeing an increase in caseloads, and people have come up to me and said, well, Scott, how are markets at all-time highs when we have record number of COVID cases? Remember a couple of things. Markets are very forward-looking, and one of the things that we now know is we have a vaccine, and we have 2 vaccines that should be getting regulatory approval any week now and to start to be distributed. And we can really start to see the effects of that maybe 6 months from now, where you see more widespread vaccination across this country and start to see a difference, which is going to then allow the economy and the more cyclical things to open and continue to start to thrive and reopen and move forward. However, what we are also seeing in the short term, and we talk about this from time to time at River Place, we track money flows. And really what that's telling us is how many people are in buying versus selling, and was the pressure on? There's the preference to buy stocks, or is the preference to sell stocks? And our money flow analysis that we track has actually turned negative. And what does that mean? That means that more stocks are being attractive to new investors, and looks like we're going to start to see some of that narrow market that we saw in the months of August, where we were led higher by a few growth names and some momentum names in the market. And you're going to see maybe some selling pressure, some of those economically sensitive stocks, as well as you have investors kind of sitting on their hands right now, understanding where the COVID cases are, understanding what the economic conditions are, but they don't yet necessarily want to sell for a couple of reasons. One of those reasons is they don't really know where else to go, where you can't get a return. You can't get much of a return in fixed income. You can't get much of a return in cash. So investors are just kind of sitting still, waiting to see what happens with Congress and the stimulus deal, as well as how that impacts the overall economic conditions. And so at River Place, we continue to have a very balanced portfolio and have continued to outperform the market. So if you have questions about what's going on in your individual portfolio or how to better position yourself to handle the next 3 to 6 months, feel free to give us a call. We're easy to talk to. We're here to help you. So you can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope that everybody has a wonderful rest of your week and look forward to talking next week. Thanks so much.